Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Wednesday, the 25th of March. Starting off with Concha, where there was a decent rally yesterday that broke the 50-day moving average at 5.38 pence and was also a rebound off the floor of an August rising trend channel, with its floor towards the 4.6 pence zone. That is obviously that area is obviously the barrier or boundary between the buy and the sell argument at the moment, but it is looking like a positive situation given the way that support for the shares since the summer has come in well above the 200-day moving average, currently at 3.96 pence. When you see that sort of clear air between support and the 200-day line, that's normally the sign of a very bullish stock or market. The ideal scenario now is that there's no end of day close back below the 50-day moving average ahead of a retest of 7.5 pence plus, which was the resistance of last year. This stage, only a weekly close back below the 200-day line would be outright negative, so that would take us sort of really below 4 pence for that scenario. Next up is a stock which is not looking quite so sprightly yet, and that's Golden Saint. Here you can see that there's been a cruel breakdown over recent months. 50-day moving average, the blue line here, blocking any attempts at a rally. And that's really still the case at the moment. We had an attempt at a rally at the beginning of March. That took the shares up towards the 0.6 area, which was also resistance in January. The ideal scenario here is that the shares will manage to stay above the floor of this rising trend channel from January at 0.2 pence, ahead of a retest of the 0.6 pence zone. Be cautious on the stock. You may wait for both a break of the RSI back above the 50 level. It's 45 at the moment, and the share price above the 50-day moving average at 0.3 pence, probably on a 2-day close basis. You can see how earlier in the month there were a couple of closes above the 50-day line, but then they did fade. So a couple of 2-day close above the 50-day moving average, the buy trigger that is looked for there. Next up is a stock which I haven't looked at before at all, either here on the bulletin board heroes or anywhere else. It's Inspired Energy, and what you can see here, is the big gap through the 200-day moving average at 11.27 pence. Floor of the gap currently around 10.75 pence, and that's the end of day close stop loss on the buy argument. Usually such gaps through the 200-day line are explosive trend changing events, and you would expect the shares to be able to make progress towards the top of a rising July trend channel at 16 pence plus over the next month or so, especially if the gap remains unfilled, and especially also if the RSI, the resistance from January at 11.5 pence remains or becomes new support. An old favourite from last year, Octagonal, which fell on rather hard times, as can be seen from the daily chart at the moment. The shares sort of peaked out around 0.5 pence plus in the summer, and then the drift then towards 0.2 pence or even below. Multiple points below 0.2 pence, and a final bear trap rebound down to 0.175 last week. Good news here is that we've got a decent end of day close above the 50-day moving average of 0.21 pence, and that should guide the stock back towards the area of the 200-day line. That's 0.33 pence or above over the next 2 to 4 weeks. At this stage, really only sustained price action back below the key 0.2 pence support level would suggest that this is just another flash in the pan recovery. Roxi Petroleum, a stock which has been trying to break up for many weeks now, looks quite encouraging in the sense that we've got this rising 200-day moving average. The next cross between the 50-day and the 200-day lines is likely to be a golden cross. The 50-day moving average here at 10.5 pence, and the 200-day line, what's that, 11.99. So they're likely to deliver a buy signal over the next couple of weeks. Probable trajectory here is that we're looking at a pattern within a rising trend channel from July last year, and we bounced off the floor of that, which is also ties in with the 50-day moving average. So at this stage, above the 50-day line, looking for a retest of the 20 pence plus area over the next month or two. Finishing off with a favourite amongst many bulletin board watchers, that's UK Oil and Gas. And one attempt to clear the 200-day moving average, or the first attempt earlier this month, did not make the grade, but we've got a rebound off the 20-day moving average at 0.66 pence, and while we remain above that, there is a chance of a retest of the 1 pence plus area initially, and even up to October's resistance at 1.5 pence, but probably looking just for the retest of 1.1 pence plus as the initial target. Otherwise, we might be jumping the gun in terms of recovery here. That's it for me. More updates at masterinvestor.co.uk.